Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this weekly review, I typically review for education a prior trade that we've done the prior week, stock or option trade, explain what we did, the compelling setup, how we managed it all the way through closure. I'm going to do the same in this episode, but I'm going to do it on a setup that we're giving our subscribers, a bullish continuation pattern. With many beautiful setups that we can trade stocks or options on this week if it triggers, as I'll discuss. Master Trader, we are technical based traders. Everything starts with a compelling pattern, and then we overlay all the other concepts which combined make up our technical objective systematic approach. Where is that pattern in the trend, support, resistance? Is it showing relative strength? What about multiple time frames? What are the broader markets doing, etc.? So every time we look at a chart, you will hear us talk about multiple concepts to conclude that something's a high probability setup. So this is the first bullet here. Price is king. What is the particular bullish setup? Of course, these apply to anything that move, any time frame, and they work identical to the short side. And so every one of these simple red and green candlestick configurations are bullish setups. And then, as I said, you overlay those other concepts. So I'm going to be talking about in this example of Intuit is a bullish 1, 2, 3, but in connection with the overall continuation pattern, which is going to be this one actually, what's called a symmetrical triangle. Now these words are meaningless, and we don't trade anything without the master trader analysis of what the candlesticks are doing and the patterns, but they do have significance if you understand what they're doing as a continuation pattern. For example, Intuit's going to be this one. So we have lower pivot highs, higher pivot lows coming into an inflection point. Once a bullish setup occurs, and it doesn't have to be a break of this line. This line, the trend lines are meaningless. Where I'm just putting these on here to show you the higher pivot highs of demand. And when it comes into the apex with all of these, they suggest an expansion of volatility in the direction of the overall pattern of the consolidation. On our daily charts, we use the blue is the 20 MA, green is the 50, red is the 200. We call them visual aids. They speed up the analysis. So here's my apex here. So we've had a steady decline, short, intermediate, and long-term daily chart of Intuit. It was trying to break out here, and it failed miserably, blasting through, making lower lows. Retracement concepts, roughly, 80%. So that's a good start of rebuilding. So it retraced, made a higher pivot low than this. Went up, came down, made a higher pivot low. This is a wide-ranging, igniting, engulfing bar. Engulfed 10 days of data. Then it took out the prior pivot high, so I have a higher pivot high now. I have two higher pivot lows. I have my 20 and 50 period moving average flattening out, and notice that it's coming into this apex. This is what we call a master trader buy setup. That's this picture right here. A master trader buy setup is a retracement in an uptrend and reversal on support. Now the buy setup triggered, and it took out, it was a closing over 1, 2, 3 bars high, and again retracement. So this retracement in 2 bars retraced over 50% of that. Bullish. Now I have an inside bar. That is my bullish 1, 2, 3 continuation, which we define as a wide range bar with an inside bar that stays in the upper third. So that's a continuation pattern. I like to tell students that if you drop down to a 15-minute chart, this inside bar is actually 26 bullish 15-minute candlesticks that stayed in the upper 1/3 of this bar. The entry is over the high of these two bars, stop under the low. That's our 1, 2, 3 setup. In the bigger picture of a symmetrical triangle, it's getting into the apex here, and if it takes out the high of these two bars, the pattern suggests it's going to take this out, and this will be a fantastic entry point. So we're recommending to one of our advisory letters just to buy the stock, and then to our weekly options trader, which specializes in selling short-term options and spreads that expire 10 days or less using our technical approach. We're going to sell a put spread, the 380s, just way down here. They're juicy. We're going to do, I think it's $15 wide. Enter over the high, stop under the low, manage in between. It expires in 5 days after, if it triggers on Monday. And that's what we call an income trade, where we keep the credit received. It's full profit as long as it expires above the short strike of 380. This is a time of year we give our most phenomenal specials for the holiday. We only do this once a year. It's our absolute best savings for our online seminars, stock and option seminars, our 3 advisory letters, and our live green trading room, which, by the way, you can take a $7 trial anytime. Go to mastertrader.com/holidays. Hope you enjoy that. As always, email Greg or me with any questions. Good trading, and see you in the next trade review video.